Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 23rd, 2025, we're focusing our attention on the USDCHF currency pair, which has seen some significant movements recently. First, let's look at the headlines impacting USDCHF. The current rate stands around 0.79238, representing a notable decrease of 0.69% in the past 24 hours alone, according to TradingView. News sources like FX Street indicate that USDCHF is softening, pushing below the critical 0.8000 level due to ongoing tariff uncertainty and a general sinking of the US dollar. This aligns with reports from investing.com suggesting that the Swiss franc is strengthening amid diverging monetary policies between the Swiss National Bank and the U.S. Federal Reserve. Many believe the Fed may have waited too long to cut rates, a sentiment that actively weakens the dollar and, by extension, the USDCHF pair. Action Forex previously noted a recovery attempt towards 0.8063, but it failed to sustain above 0.8054, confirming this area as a strong resistance zone. Furthermore, Forex.com highlights the US dollar's defensive stance, with USDCHF attempting its third consecutive daily decline, potentially breaking multi-year support levels. Now, let's turn our attention to the charts, starting with the daily time frame to get a broad overview of USDCHF's journey. Looking at the data from March 2024, we see the pair embarked on a significant bullish run, peaking around 0.91965 by late April 2024. However, this was followed by a prolonged downtrend, with the price steadily declining through the latter half of 2024 and into 2025. Notice the sharp drops in April 2025, particularly on April 3rd and April 10th. The candle on April 3rd saw a more than 2% decline, and just a week later, on April 10th, USDCHF plunged over 4% from 0.85545 down to 0.82076, demonstrating immense bearish momentum. This capitulation was a clear signal of strong selling pressure, fundamentally driven by the news of a weakening US dollar and a strengthening Swiss franc. After some consolidation in April and May around the 0.82 to 0.83 region, the bearish trend resumed, pushing the pair further down. Bringing our focus to the most recent price action on the daily chart, we can clearly see the ongoing bearish pressure. The price broke decisively below the psychological 0.8000 level, which corresponds perfectly with the news reports. The last few daily candles, especially on July 21st and 22nd, show strong red candles closing near their lows. This confirms the narrative of the US dollar sinking and the Swiss franc strengthening. The 0.8054 to 0.8063 area, previously identified as resistance from technical analysis, has held strong, preventing any meaningful recovery. Now let's switch to the 1-hour chart to get a more granular view of the recent movements, particularly over the last few days. Zooming into July 21st and 22nd, the hourly chart vividly illustrates the relentless downtrend. We observe a clear pattern of lower highs and lower lows, indicating consistent selling pressure. The price attempted minor bounces, but each one was quickly met by sellers, reinforcing the bearish sentiment. The area around 0.797 to 0.798 served as a significant resistance zone, repeatedly rejecting any upward movement. For even finer detail, let's examine the 15-minute chart, especially for trading decisions. Here, the sharp declines and brief consolidation periods are even more pronounced. On July 22nd, starting from around 7:08 Universal Time Coordinated, the price dropped sharply from 0.798 towards 0.79156. Each small recovery on this time frame was short-lived, highlighting the dominant bearish momentum. The current price, as of the last data point on July 22nd at 23:53 Universal Time Coordinated, is 0.7936, which is very close to the reported live rate of 0.79238. This confirms the strong immediate bearish momentum and the breach of important psychological levels. So, What does this mean for trading USDCHF? From a long-term perspective on the daily chart, the overall trend is undeniably bearish, originating from the highs near 0.92 in April 2024. Major resistance levels to watch for future recovery attempts are located around the 0.90 to 0.91 area, which proved insurmountable in late 2024. More immediately, the 0.8000 psychological level has flipped from potential support to strong resistance. Above that, the 0.8054 to 0.8063 region, and then the 0.82 to 0.83 consolidation zone, will act as significant hurdles for any bullish reversal. On the support side, the current low of 0.79156 from yesterday is the immediate level to watch. Below that, the next significant psychological support would likely be found around 0.7900, followed by 0.7850 or even 0.7800 if the downtrend accelerates. For short-term traders, the 1-hour and 15-minute charts clearly indicate a continuation of the bearish trend. Short positions on retracements to immediate resistance, such as the 0.796 to 0.798 area, appear to be high-probability trades. Conversely, any attempt at a bullish countertrend trade would be extremely risky, requiring very tight stop losses due to the overwhelming bearish momentum. High volume during the recent declines further validates the strength of the bearish move. The news of tariff uncertainty and diverging central bank policies provides fundamental backing for this technical setup. The current US dollar sinks narrative strongly supports selling rallies in USDCHF. The market's perception that the Fed is too late on rate cuts further reinforces the bearish outlook for the dollar against the franc. To recap the important price levels, the current price action is hovering around 0.792 to 0.793. Immediate support lies at the July 22nd low of 0.79156, with a strong psychological support at 0.7900 below that. Immediate resistance is the 0.796 to 0.798 range. Crucial daily resistance levels are 0.8000, 0.8054 to 0.8063, and the 0.82 to 0.83 zone. For unbiased predictions, continued bearish momentum is highly likely, 75% probability, especially if USD weakness persists due to Fed policy or broader risk-off sentiment favoring CHF. A short-term bounce or consolidation is moderately likely, 20% probability, as profit-taking occurs or oversold conditions trigger minor corrections, but these rallies are expected to be met with selling pressure at resistance. A major long-term bullish reversal is currently very unlikely, 5% probability, without significant shifts in central bank policies or global economic outlooks. Finally, things to look for include confirmation of a breakdown below 0.7900 with increased volume, any unexpected shifts in Fed or SNB policy announcements, and major economic data releases from both the US and Switzerland. These factors will dictate whether the current strong bearish trend continues or if we see any significant shifts in market sentiment. Thank you for joining Explain the Charts, and remember to stay disciplined and manage your risk.